We will be discussing today about the basics of mutual fund. This video will help you to understand how mutual funds work, and how it can give you great returns. If you are new to investing world, check out our previous video on stocks before jumping into mutual funds. For those who are going to invest or currently invested in mutual funds, watch this video to understand it better. So what is a mutual fund actually? Mutual fund is a pool of money that individual investors provide to a fund manager to invest on their behalf. They are less stressful and easiest way to invest in the market. Let's explain this through an example. John has $5,000 to invest. He is new to the investing world. He doesn't have deep knowledge about stocks and doesn't want to manage his own money. There are many people like John who wants others to manage their money. They give all this money to a company who hires a fund manager to invest. A fund manager is a professional who invests based on the type of the fund. A mutual fund usually invests in a variety of stocks and bonds, which helps in diversification and reduces risk exposure. Mutual fund also allows to use dollar cost averaging strategy. What is dollar cost averaging? Dollar cost average is a method of buying securities for a fixed amount on regular schedule. Let's explain this through an example. Let's say John decided to buy a mutual fund for $1,000 every month. He doesn't care if the market goes up or down. He just keeps buying them. From the table, you can see that the price of the mutual fund goes up and down. But since John invested regularly each month, his initial cost of buying the mutual fund has averaged. He didn't buy at a price too high, nor he bought at a price too low. This is the advantage of dollar cost averaging. It reduces the effort needed to time the market. A large percentage of investors use this method to profit from a mutual fund. There are mainly two types of funds: open-end and close-end. Open-end funds are bought and sold at their net asset value. The net asset value is calculated based on the value of the fund's underlying assets. Close-end funds have fixed number of shares on an exchange. Like stocks, their price is determined by supply and demand. What are the benefits of investing in mutual fund? Well, you don't have to do much work. Fund managers will actively monitor the stocks and bonds in a portfolio. They will also visit companies to make investment decisions. They spend a lot of time analyzing and interpreting how a company performs. Why doesn't everyone invest in a mutual fund then? Well, there's a catch. Every fund will charge a management fee called expense ratio for managing your money. High expense ratio will often eat up a large sum of your profits in the long run. Also, when choosing a fund, one has to research about it in depth. There are quite a number of funds that didn't give returns as expected. So that's all you need to know to get started in mutual fund. If you liked this video, do subscribe to our channel to get more updates. And share it with a friend who you think would require this. Also check out our other videos to get the right education on investments.